I am Nick Hodge, investor and co-owner of Resource Stock Digest and Digest Publishing, and publisher of Daily Profit Cycle, where we host a number of other editors and publish daily on the market in all its forms. I am without my co-host and co-owner, Gerardo Del Real, who is enjoying some time off, and I'll be hosting this 267th episode of Investing in Bizarro World by myself. So I've made an outline. I'm going to talk mostly about what's going on in the markets and how we're dealing with that, responding to that, and advising clients of our premium investment products. I'll do a bit of looking back, a tiny bit of looking forward, and I'll try to give you some insights into the market while also teasing, again, those premium letters that we publish. So first, Mother's Day is coming up here in a couple of weeks. I get an early reminder because my wife also has a birthday that falls that week, so it's typically top of mind. So that's your reminder to get your card, your flowers ordered, and your presents purchased. So make sure you get that done. In the markets, we've had several down days in the S&P driven by rising rates. You've got a 10-year yield that is now at 4.7%, the highest it's been in 6 months. That has given pause to these high growth sectors and high PE sectors, like the NASDAQ and artificial intelligence, for example. You couple this with earnings season, and it's been a bit of a bumpy road with VIX creeping up past 15 in the past couple of days here. The biggest call out has been Tesla and Meta earnings, both of which were not great, but Meta went down much more and took the market with it last week. I don't think this is a crash. I think that markets are still largely bullish. If we're looking at the S&P, I think that you'll get, or have had actually, by the time you see this, Q1 GDP for the U.S. and we'll have shown that the economy continues to grow, albeit, not at a 5 or 6% clip, but still likely 3 or 4% growth. And you still got inflation that is sticky high, which means that interest rates are going to be higher for longer, which is why those 10-year bond yields are at 4.7%. So gold has sort of separated itself. It hasn't been trading inversely to those sticky high and rising bond yields. And so that's a signal that gold is officially bullish, remains bullish, and should be purchased now along with the gold equities. So that's what I was writing about last week. I read a weekly letter called Hodge Family Office. We took the liberty to buy a new gold stock in that issue. One that's the second or third largest holder of gold resources in Nevada, in the behind the joint operations of Barrick and Newmont. This is a company that's in production, has several assets, and just raised about $100 million, ready to go, and I think ready to be valued higher in this gold bull cycle. So that weekly letter, Hodge Family Office, is where I speculate with my own capital. I write about what I'm doing with that on top of the monthly letter I write, which is called Foundational Profits, which covers what I'm doing with my long-term safe capital and retirement accounts. So that would have been a smaller cap gold stock that we bought last week in Hodge Family Office. Gerardo's been covering gold stocks as well. So we held a commodity supercycle event at the end of March, and lo and behold, copper continues to do well. Has ticked up to $4.50. That's the highest it's been now in nearly 2 years, since May of 2022. We're starting to get some M&A in the copper space as well. So you may have seen by the time this podcast comes out that BHP has made a $39 billion U.S. bid for Anglo American. Initial reports say that bid will likely have to be increased, or the Chinese will come in over the top and then try to get Anglo American for their copper production. So a number of copper names have been going up. And again, we just held a super cycle event. So the the copper name that Gerardo recommended as part of that for Junior Resource Speculator has had a good run here over the past month. And as I've been telling you in this podcast, we went long in Foundational Profits via an ETF, a copper ETF in February of 2024, just as copper started to turn. That's now up more than 20% and holds, in fact, Anglo American as one of its top 20 holdings. So getting some exposure not only to copper stocks, but to copper stocks that are getting acquired at a premium there. And that has to do with, commodities catching a bid in general. We had the super cycle event. We were telling you phase 2 of a commodity super cycle was about to unfold. Now it is unfolding, and it's underpinned by those higher rates and this inflationary and stagflationary environment that we get that will support those commodity prices. I don't want to say across the board, but in a broad fashion, right? Whether it's PGMs or copper or uranium, chemicals, fertilizers, etc. So those are sectors to be in here as I see it, and that's where I'm at least partly positioning. On uranium, let me spend a couple of seconds there. Again, this will be an abbreviated podcast because I'm on my own. Continues to consolidate sideways, but does not want to break down. To me, it remains bullish, and for reasons I was just talking about for copper, will remain bullish for uranium as well. Lots of names to choose from now, lots of liquid names and companies starting to execute, do different types of deals and follow different paths. And so now you have to be, reacting to what's going on in the market and, doing your due diligence on the individual names to see what's going to perform the best and be willing to change your mind, be willing to change your positions and, be willing to close out positions and initiate new ones. So we took the liberty to do that in Hodge Family Office as well here in the past week while uranium continues to consolidate. And I'll tell you why, sort of just as an insight into how we are positioned or were positioned, how I look at markets and the advice I sort of give clients in the weekly issues. So we've been in energy fuels for a long time. I mean, fortunate enough to be in it below $5 US, which is really on the cheap side. It's had a rough go of it here in the past couple of weeks as it announced a $250 million takeover of a company called Base Resources, I believe it is. This is a mineral sands play in Madagascar that has a rare earth sort of, offtake component to it. Energy Fuels took out the whole company in a combination of shares and cash for, I think, $240 billion US. Kind of dilutive. Market didn't like it, sent shares down, not all the way to 52-week lows, but just above them in the low $5. I didn't like the deal. I was in Energy Fuels, as I had told subscribers, for the primary uranium production and milling with U.S. exposure, and then the rare earth kicker that it had. I wasn't trying to own a headlong rare earths play, certainly in Madagascar. That's not even fully permitted, by the way. So we were in early enough that we were still up on our position, taking the opportunity to exit. Fortunate that, that's an NYSE listed company with liquidity, so we can get in and out. I've talked a lot about why I like those liquid names. That's one reason. So we'll take our small profit on Energy Fuels, and we moved into another similar company that I'm not going to discuss here, but subscribers got that email last week. So taking some uranium profits off the table for reasons that I just laid out there, rolling them right into a new uranium play. So just a little bit of insight there on how I'm thinking about uranium, at least on the individual uranium stock side of it. We'll drop my pencil. In Foundational Profits, I cover it from a macro sort of ETF perspective, and I'll just leave that alone for now. I thought the Energy Fuels discussion was a bit more timely and relevant. What else? Cannabis I had on the sheet from a week ago when Gerardo was here, and we did not get to it. So I wanted to talk about cannabis for just a little bit. That's another sector that's been getting bullish for a couple of different reasons, and tends to trade altogether based on sentiment on what's going on the legislative side of things. I'm talking about specifically here in the U.S. So you might know that over the past, call it 6 months, Biden has softened his stance on marijuana and cannabis. He didn't really talk about it the first 2-3 years of his presidency, but he started to make some pardons in the past 6 months. He's starting to talk more about it, and he's mentioned it in the State of the Union 2 months ago, or whenever that was. Kamala has been tweeting about it and talking more about it, and holding discussions, roundtables, etc., bureaucratese type stuff, right? This comes at the same time that the HHS, Department of Health and Human Services, has asked the DEA to reschedule it. So in the U.S., cannabis is still a Schedule I drug, the same as heroin, which makes no sense considering it's legal as a recreational substance in like half the states, 24 states or something. So HHS has asked the DEA to reschedule cannabis. The FDA has supported that decision and has provided documentation as to why cannabis should be rescheduled or descheduled. But that's an ongoing bureaucratic process that no one has really insight or insight on the timeline for, I should say. We don't know exactly when that's going to happen. And then that's on the federal level. The individual bills, the banking acts, I don't put a lot of stock in that. Chuck Schumer has been talking about that for years. There's been no action. But the rescheduling is certainly more important and would set a signal. So uranium stocks have been getting bullish on that is one thing I wanted to say. The other thing is there's talk of some sort of interstate commerce agreement, a possibility for an interstate commerce agreement. This would allow states where it's easy to grow cannabis, where there's a surplus, where it's been legal for some time, particularly California, the West Coast, to export to states where it's harder to grow cannabis, but it's now legal, so exporting California cannabis to New Jersey, for example. And there's a couple of plays that are large California growers that will benefit if this, if interstate commerce does get approved, and obviously ultimately if it becomes federally legal. So, one potential subsector of the cannabis market to be looking at there is these large growers that would have the capacity to export, would be some revenue hogs, if this, interstate commerce stuff goes through. And then the last thing worth mentioning with cannabis is at the state level. So we'll be on the ballot this fall in Florida, which is a pretty big state, pretty important. Polls are actually close, so it needs 60% support to pass, and polls are right there. The most recent ones I've looked at, like 58 to 61% support within the margin of error. So something to keep an eye on there. Lots of old folks in Florida, to be sure. And then, Pennsylvania is getting louder about wanting to legalize at least certain constituents in their state legislature. And you've got Fetterman there, who's the senator who gets a lot of social media and media buzz in general, has been tweeting in support of Pennsylvania legalizing cannabis, where it's still illegal recreationally, despite it being legal in the adjacent states of Ohio and Maryland, where I'm from, and New Jersey. So a couple of big states there talking about cannabis legality. So just worth noting, those stocks tend to run hard. When they do run, they've been beaten and broken down for some time. So I started to just pay closer attention to them, and we've traded a couple of names in Hodge Family Office, those California names that I was just talking about there, and we do it again and via ETFs in foundational profits. So last thing is on countries. As I get to the end here of the bullets I wanted to talk about for the week, and I was talking when I got bullish on copper a couple of months ago, I was saying it was because of China starting to get bullish. And what we've seen since then is China starting to get bullish to a certain extent. I recommended a Chinese ETF, a country ETF, at the same time as a copper ETF back in February. One that held large cap Chinese stocks traded on or held in the Shanghai Composite Index. That's been a good place to be. We made 6% from that in the past 2 months, and that's a good macro move. On average, broad macro markets typically go up 7 to 10% per year. So to move into China, to time that well, and to be able to get 6% in a couple of months is a good macro move. And I wanted to highlight that because other countries are getting bullish as well. This is macro talk now. So, Europe is starting to open up. And so we took our profits from China in foundational profits, and we're moving into a European market that's gearing up to host the Olympics. So I think they'll have the Summer Olympics bump. And it's easy to buy countries with, the thousands of ETFs that are out there these days. There's multiple ETFs to buy individual countries with that hold, large cap companies that are domiciled in those individual countries. That's another theme that we do in foundational profits. So wanted to end there just on the country discussion. We are broader than the U.S. and Canada. We look to global markets for profit. We look to multiple sectors of the natural resource market. And that's just me and Gerardo. We also now have a tech and crypto component that we publish over at Digest Publishing. We just had a quarterly call-in for Chris Curl's crypto cycle that coincided with the halvening to update members about that occurrence and how to position for it. Again, we gave him $50,000 that he's running a real money portfolio with that he puts out buys and sells, and along with rationale and his thesis for those investments and speculations. So you can follow along with that at Crypto Cycle. It was great to see some members there. They've been around for a year or two now, that publication. So members that have been with us for some time, dialing into the call-in and asking questions. And, Chris does a great job at providing tutorials. We continue to hear that some of the crypto stuff is complex, and you have questions about the wallets and how to hold them and buy them, etc. Chris is great at breaking that down. He's been making videos, step-by-step videos to instruct people. Taking requests even if someone is having trouble with a certain coin or wallet, for example. And so all that to say, check us out. Check out Digest Publishing. Go check out the products. We put out issue teases for all of our monthly products every month that tell you at least generally what we're looking at. We do podcasts like this every week for 267 weeks in a row to sort of help you read between the lines and see what we're looking at and give you our insights. But the rubber really meets the road in those paid publications where we're writing about what we're doing with real money in real time, and you get the actual buys and sells. So I'm not sure how long that was, but I'm going to wrap it up there. Remind you to check out Daily Profit Cycle, of course, for all those free editorials and where this podcast gets published. Resource Stock Digest for the sponsored content that we have there for junior resource companies. It's a great resource for interviews with management. And with that, I think I'll sign off. I'm Nick Hodge without my co-host Gerardo Del Real, and this was episode 267, I believe it was, of Investing in Bizarro World. Get the Mother's Day presents done.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.